Welcome to the All Financial Hour podcast with Steve All.
He was known as the master of FedSpeak. Former Federal Reserve Chair Alan Greenspan, who recently passed away at the age of 100, was once asked by 60 Minutes about his famous press conferences.
I would engage in some form of syntax destruction, which sounded as though I were answering the question, but in fact had not.
We showed him a tape of him at a hearing.
Modest preemptive actions can obviate the need of more drastic actions at a later date, and that could destabilize the economy.
Very profound.
Very profound. Impenetrably profound. And so you worked on these, right?
Oh, of course.
But what would often happen is you'd get two newspapers with opposing headlines coming out of the same hearing.
I succeeded.
I mean, I think he sounds amazing. He sounds really intelligent, so much so that you want to agree with him, but you don't even know what he's saying. You know?
Oh, that was it 100%. He was the master of not answering the question.
Yeah.
But he sounds so intelligent that if I was a member of Congress and I really didn't know what the heck he was saying, which that's not my wheelhouse, I wouldn't question what he just said, or could you explain that in normal terms? Now, it's because politicians are slightly different. You ask a politician a question, they'll avoid the question and answer the one they want to answer. So it's a little bit different, but you got to remember when these guys are talking, they're in front of, sometimes the people are very good at it, but sometimes they're not. But that's like what he just said. What did that say? As he put it, when I get done, the headlines will be different. And I think that's where we're at today in our news cycles. We have headwinds and tailwinds. Right now, interest rates are higher. So cost of housing is higher. 5 to 6 years ago, interest rates were too low. So it didn't help retirees. Well, now we get to the point where the interest rates are higher. That assists retirees. Why? Your money market accounts are higher. Your CD rates are higher. Annuities, they're based on bonds when you're talking about the fixed index world. And if there's more interest available, the caps and the spreads and everything goes up. So there's those things that are going to help us. And now we look at it to the point where, what's the Fed going to do? Are they going to start lowering rates? Because remember, bond prices, I think the easiest thing that was taught to me very early was bond prices are like a teeter-totter. This is interest rates. When interest rates rise, bond values fall. Mm-hmm. And when interest rates fall, bond values rise. So it's the opposite effect on your portfolio when those things happen. But remember about 2 years ago when they said the 60-40 portfolio's dead because both halves, both bonds and stocks, were in bear market territory in the same year. It hadn't happened in years. So it's gone. Well, it had a bad year. It was one of those phenomenons and goes from there. But it's still fine now. And I think the thing that people have to look at is, where are you at and how much are you willing to take? Risk-wise. And that's where we sit down and look at it. He said, hey, am I aggressive? Am I conservative? Do I want to protect what I've got in the market? And that big question is, when can I retire? I think everybody's got that. Pete and Jane had come into the office. They wanted to know when they could retire. So we sit down and we looked at everything that they had. Pensions, savings, went through the whole thing, and we're going to do that analysis for you and everybody else. And not all the time do I hit that analysis that, oh, don't worry about it, everything's going to be fine. And that's the part where you have to tell people what they need to hear, not what they want to hear. And sometimes that's the most difficult meetings that we can have, when we have to sit down with somebody and say, no, your expenses are too high. You need to cut back on your expenses. No, you can't retire today. If you worked 3-4 more years, it would be from there. or a combination of those two things. And I think that is the part where we come in. It's not just about investment returns. We do assets under management. I'll put our returns up against anybody else's returns. But I look at it to the point where planning is the most important thing. Because if you don't have a plan, how do you know if it's good or it's bad? If I'm spending too much? If I could spend more? Two things. I don't want you to run out of money during your retirement years. And the other thing that I don't want to hear is when you're no longer here, your kids come in and say, I can't believe mom and dad had this much money. Why didn't they do more? I want to make sure that you get out of retirement what you're looking for. And I think your wishes, hopes, and dreams are the most important thing when we're looking at when can you retire? Will you run out of money? Call now. Ask for that comprehensive retirement plan. Give us the availability to look at your plan. I always like to say give you a second opinion. If you don't have a first, I'd be more than happy to give you the first opinion also. Come in, ask for that comprehensive retirement plan. Let's answer those questions around when can I retire and will I run out of money? Give us a call now.
And the best part, it is no cost, no obligation to you. That comprehensive retirement plan, give a call today, 636-230-8824. That's 636-230-8824. You mentioned risk just a few moments ago. A lot of people thinking, okay, well, am I taking too much risk here in the market? I'm a little confused about where things are going. Well, if that's you, you're not alone. Investment manager Charles Bobrinskoy tells CNBC that one emotion seems to be driving a lot of investors.
Yeah, at any given time, there are times in which people are overly greedy or overly fearful. And I think right now it's absolutely the case that we're in overly greedy mode. There is FOMO all over this market. And the indicators that people talk about, whether it's your cab driver asking you about his latest AI wins, or it's one of your kids telling you you got to get with it and invest more in technology, all of these things tend to be signs of euphoria, and it's never good to be buying when everybody's buying.
Well, here's the deal. No one wants to feel like they're sitting on the sidelines, Steve. And I want to know, how do you help people in retirement, or maybe they're close to it, benefit from the market, but without having that fear of missing out drive their decisions there?
Well, I think the fear of missing out is the biggest one. I can still remember about a year ago when everybody was talking about gold. What about gold? What about gold? How much gold do I have? Then we've had the decline in gold. And then with the SpaceX. Should I buy SpaceX? I'm not recommending gold. I'm not saying you should sell gold. I'm not recommending SpaceX. I'm just going to the fear of missing out. It went public and shot way up, and now it's down. Where is it going to be in the future? I don't know, but we might want to look at the mathematics behind it to make sure that it makes sense. I do agree with that Warren Buffett philosophy. Be fearful when others are greedy, and be greedy when others are fearful. When is the best time to buy? When there's blood in the streets. And that's usually the part where most people are heading to the exits. And that's where I look at it. If you're in that uncomfortable space where you're looking at it and you said, I've had some good returns in the market over the last couple of years, I'm going to ask, what are you doing to protect them? If they're in your IRA or 401k accounts, I like to look at it and say, do I have that availability to roll it out? Put it in a fixed index annuity, not with an income rider. I'm not looking at income right here. I'm trying to lock in those gains. And then I can take those free withdrawals from that fixed indexed annuity and put that money back into the market over, if I get 10% free withdrawal each year over the next 10 plus years, I can put it back in. Lock in gains, reduce my fees on my assets under management, and then dollar cost average back in. It's how we built our portfolios. How can we do that in retirement? Give me a call right now if you're concerned about how high the markets are and how do you lock in those gains. Give me a call. Ask for the risk-reward analysis. Allow myself and my team to assist you in looking at how could you reduce some of the risk that you're currently taking in the market.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.